So there's a myth amongst property investors that say that houses equal good investment and flats equal a bad investment. And that is not true. It is, with everything in property, a lot more complex. So in today's video, I'm going to be outlining the key differences. I'm going to be dispelling some of those myths, and I'm going to be talking about some of the key considerations when you're looking at houses versus flats. So we look at the key differences in terms of locations. Generally, houses are in suburbs, in villages, or in the countryside. And the main reason for that is space, because obviously a house normally comes with a garden, normally comes with a front garden and a back garden, and is a lot bigger and therefore requires more space. Flats are generally in the centers of towns and cities or near towns and city centers. And space is again the main reason for this, is because it's all about kind of density and maximizing land available in these central locations and squeezing in accommodation where it's possible. So for example, squeezing in a flat above a commercial unit, creating a block of flats, doing commercial conversions and trying to squeeze as much housing into that. And again, this is about returns as well, those developers looking for higher returns by doing those kind of conversion deals. But the other reason for these differences in terms of location is also demand, because younger people generally want to be nearer the city centers because that's where the nightlife is, that's where they might work, so they can have a shorter commute, and they feel at the center of the action, and therefore that becomes a desirable place to live for them. But also because they're younger, they're less likely to have a family, so they might only be a single person or potentially a couple, and therefore they can fit in a flat compared to a family which wouldn't be able to squeeze into one. And conversely, families want space. They want parks nearby, they want schools and amenities and nice places for their kids to go out and enjoy. They want gardens. And that's why houses are generally built on the outskirts in the suburbs where there is more space, and that becomes the place for families to reside. So the key thing to note here about location is, depending on your goals, if you're looking to invest in a really central city center location, then it's likely you're going to have to settle for a flat, because the chances of you finding a house in that location are very, very slim. So it's actually going to depend on where you're looking to invest as to what housing type is actually going to work better for you and your goals. And you're going to have to make a decision in some ways as to what's actually more important. Is it the property type or is it the location? So the second key difference is around tenant type. As I've already mentioned, different demographics of people desire houses compared to flats. And the reason that this is important is because it could potentially impact on your deal numbers, because it affects the churn and potential void periods of your buy-to-let. So generally speaking, families like houses. So if you have a full house as a buy-to-let, that's going to likely attract a family. And generally speaking, families will look to stay in a property longer because they don't want the disruption of moving their kids out of local schools. We compare that to a flat, and as we've already said, that is going to attract potentially single people, young professionals, couples, before they've had children. And those people are generally more transient in their lifestyle, and therefore they're likely to have a higher churn of tenants going through that buy-to-let if it is a flat. And also, as everything is, it's not as simple as just saying flats are going to have a higher churn than houses, because smaller houses, so you can get 2-bed houses, potentially might have the same churn as a flat, because a 2-bed house might again only attract young professionals. And one example is London, and people in London want to live generally closer to the centre. And I know many people who have a family who live in a flat in London because that's all they can afford, and they want to be in a more central location. Another exception to this is because of the interest rate rises and rental prices going up to record levels. This could mean that now more and more people actually look towards flats because that's all they can afford in this market. So the next key difference is freehold versus leasehold. And this is where some people start to get a little bit itchy when I mention leases. Let's start from the beginning. Let's just define what the difference is between a freehold and a leasehold. So quite simply, a freehold means that you own the building and the land that it stands on indefinitely, and you are responsible for maintaining the land and the building. On the other hand, for leaseholds, you own the property, but you don't own the land. And technically, you only own the property for the length of the agreement with the freeholder. So in terms of leases, this means that you don't technically own the property. You're only leasing it for the length of your lease. So if your lease is 99 years, you only own that property technically 99 years. However, it is worth noting that that's the law on paper, but it is very, very unlikely that a freeholder will evoke your right to maintain that lease and maintain living in that property. Leases, I think for this main reason, the fact that you don't actually technically own it, has a bad reputation. But you can compare that to having a mortgage, because when you own a property, whether it's a freehold or a leasehold property, you don't actually own that property. The lender owns that property. They have first charge on that property, which means that you can't do anything in terms of selling it or refinancing it without their permission. And if you read your mortgage terms closely, they actually have a lot more control over that property than you think. So for example, most mortgage terms say that you cannot use that property for running a business. So if we're talking about control, a mortgage has some limitations over what you can do with that property in a similar way to a leasehold. And the other aspects of leases where some of the responsibility is taken out of the owner's hands is around maintenance. So the freeholder on a leasehold property will have responsibilities around doing repairs to external areas and to shared areas. So if it was a block of flats, for example, they would be responsible for doing roof repairs and maintenance of hallways, for example. And in some ways, this can have some benefits to the leaseholder because it means that they don't have to worry about getting repairs done themselves. That can kind of be outsourced to the freeholder. And another aspect where there is some element of lost control is around covenants and restrictions that you often see inside leases. Some of these can be quite antiquated because the lease might have been written 100 years. And I've seen leases that actually say that you can't keep pigs on site, you can't use the property to sell alcohol, you can't make soap. So this is some of the complexity around leaseholds and some of the limitations of them, and that's why some people don't like them. And the other reason that people do get scared of them is because of lease running out. As I said, it's very unlikely that you will get the property taken away from you if the lease ends. And the lease length only becomes a real issue once it is under 70 years. And that's when mortgage lenders don't tend to want to lend at that lease length because it's a risk for them. And the property does start to lose value actually if the lease does go below 80 because you're getting closer to that unmortgageable point. Because extending that lease becomes a burden for someone to have to take on and then therefore an expense. However, that's on the sort of the vendor's side of the person living in that property, but from an investment point of view, leases actually provide an opportunity for deals because it is a problem to be solved. So if you are able to extend the lease and know how to do that and know the cost of that, then that provides some opportunity for getting some good deals where you've got short leases. But of course, lease lengths aren't something you need to worry about unless you're buying a property which has less than 99 years on its lease and you're planning to hold it for the long term. But if your lease is over 125 years, this is not really then something you need to worry about. And even if you stayed in a property 30 years and then sold it, there's still 90 years or 95 years left on the lease, which is a good amount. And then it's someone else's problem to sort out the extension if and when they bought it from you. So apart from the control aspect, the other main reason why people don't like leases is because of the service charges and ground rent that they can potentially be charged. So what is ground rent? Well, ground rent is essentially the rent that you pay to the freeholder to have access to that property. And what is the service charge? Well, service charge is what you will get in larger kind of blocks where you've got a freeholder who has a management company, is responsible for any queries as well as maintenance. And in some cases, potentially in sort of city centres and kind of posher areas, you may have other facilities which your service charge goes towards as well. So for example, in high-end flats, you might get a concierge service, you might get a gym and a swimming pool. All of those will be funded through the service charge. But it is worth stating here that the government is actually introducing some large-scale reforms to leaseholds in general. And from 2022, any new leases that are created, you can no longer charge a ground rent. And in terms of this legislation, the second part of it is likely to have a big shake-up of lease extensions and to make that process fairer and more cost-effective for leaseholders. So as things stand, the cost of a lease extension is based on 1, the value of the property, and 2, the years remaining on the lease. And although the cost of this will also be dictated to an extent by the freeholder and it becomes a bit of a negotiation, you can, through your lawyers, request to take it to an independent arbiter. So based on what I've said so far, I'm sure many of you might be thinking that there's a lot of disadvantages to flats and you might be put off, but there is some benefits that are worth kind of looking at. So in terms of the investing considerations and how it affects your returns, generally speaking, flats have a better yield compared to houses, as you can see from the table showed on the screen now. In terms of average yield, flats beat houses in every single region in the UK. So for example, London average yield is 4.2 compared to houses at 3.8. In Yorkshire is 5.8 on flats compared to 5.5. In the Northeast is 6.2 on flats compared to 5.9 on houses. And as we know, better yields equal better returns equal better cash flow per month. And the reason why the yields are better is that generally speaking, flats are cheaper compared to houses, and therefore you're getting a better return on that front. And as you can see from this table, average flat prices across every region in the UK are cheaper than houses. And in fact, if we look at the average price of a house in the UK is 339,000, and the average price of a flat is 245,000. So these cheaper prices means that flats are a better proposition for investors who have less capital, who might just want to get a rung on the ladder and just get going. Those investors who want to kind of dip their toe in the water, might not want to take a big risk, so want to put down as sort of a little deposit as possible, and flats enable them to do that. Another benefit of flats is that because of the leasehold arrangement, the maintenance costs are shared. That might be a significant saving, particularly if you're doing like a roof repair or something really kind of expensive, where if you owned that whole property outright, you would have to foot the whole bill. But if in a leasehold arrangement, you get to share those costs. So that can be quite a large saving and therefore increase your returns as an investor. And another benefit and consideration around flats is looking at your exit is that they could be easier to sell because they are cheaper in purchase price, as I've already outlined. So in terms of flats, there is obviously the arguments around limitations around control, but there is also some benefits to them in terms of these investing figures. I hope you're enjoying this video today. Really appreciate if you can subscribe to the channel. It really does help us a lot and helps us to grow and get more content out. So thanks so much in advance. So there might be some of you out there that are shouting at me saying, but what about capital appreciation? There's a long-held belief out there that actually flats appreciate less compared to houses over time, because houses come with more land and land equals more value. So if we look at overall UK house price data, you can actually see average house prices in the UK have actually grown by 7.8% up to August 2023, but flat prices have increased only by 6.5%. However, that's obviously taking a viewpoint of the UK as a whole. If we delve down into more nuanced regional data, then we can see the differences. It will really depend on where these flats and houses are located as to how much growth they will get. So in the great debate of flats versus houses, I'm afraid to tell you there isn't really a right or wrong answer. So it really does depend on you and your goals as to which property type is going to better be suited. So for example, if you're just looking at high capital growth areas and you want a new build off-plan property, then you're very much likely to going to be picking a new build flat. But then it's also worth thinking about and not being too blinkered and saying I'm only going to invest in houses or I'm only going to invest in flats, and looking at the deal more holistically and just looking at it from a numbers point of view, saying which property deal is going to give me the better returns. So although I've not given you a clear answer on which one's better, because there isn't an answer, I hope you've got a lot of value from this video today and that it helps you to invest more wisely. Guys, thanks so much for watching today. I hope you've enjoyed it and got a lot of value out of it. If you have, please do subscribe to the channel and like the video and put any comments in, because all that engagement really does help us, and it's great to see and hear what you think of the video as well, and put any questions in the comments and I'll get back to you. So thanks so much.